See if I can do this without screwing up the slides. So I'll see if I can do this without screwing up the slides. So show of hands, who's heard of fractionalizing real estate or tokenizing real estate? Anthony, you don't count. Because we talk about this like 3 times a day or 4 times a day or more. A few people. Who's heard of syndication, like with investors, right? This is the digital version of syndication. When I first got out of college and I worked for Marcus Millichap in Palo Alto, all of my clients in the 80s, yeah, I'm that old, were syndicators. They were doing shopping centers, they're doing apartment buildings. This is no different. So how big of a deal is this? And I'm going to talk about a traditional real estate transaction and then translate it. Colin, who's a friend of Anthony and I, just sent an article. I don't know if Anthony saw it, but Coldwell Banker in Thailand is going to be fractionalizing or tokenizing real estate. So you think if it's occurring in Thailand, is it going to occur in Virginia, New Jersey, Tampa, South Florida? Yeah. The article said within 5 years, for what their estimate was, $1.4 trillion in real estate will be fractionalized or tokenized. So why is this occurring? What is the big deal? Now for my lenders in here and for the real estate agents that work with investors, what happens when rates go up, right? People have a harder time qualifying, right? What happens when overlays come out? Are they better or worse for investment properties?
Worse.
Do they sometimes lock people out?
Yeah.
Do people have good choices if they need to go raise money to buy short-term rentals, rental homes?
No.
Do they have terrible ones? How good of an option on average is hard money? It's not a good option for a rental house if they want to hold it for 5 or 7 years. It's not a good option for a short-term rental if they're going to hold it for 5 years, right? You can't use private money. This is like the Swiss Army knife that solves that problem. And why I want you to pay attention to this is something that occurred. Jeff Willems works for the brokerage we're in. He asked me to come up to Tampa, and I spoke at a conference. And had no idea who was in the audience. There's probably a group probably twice the size. And I was using the example of a company that does this for short-term rentals. And in the audience was somebody who has 53 short-term rentals in the Kissimmee area. He came up to me on the break and he said, I've been so frustrated because my business model said I wanted 500 to 1,000 in Florida. I said, well, why don't you do that? Every lender I go to says, I'm too big of an exposure. I can't do this. You need to raise a bunch of money or you need to do something different. You don't have enough reserves, right? It's a different story depending on the lenders. They all hate this stuff. It's high risk. They love owner-occupied stuff. So this is like the Swiss Army knife of options. It works for rental houses, it works for commercial properties, it works for short-term rentals. And here's why it works so well. If you're familiar with syndication, and I'll go through mechanically how they do this, typically you have to be an accredited investor. So what does that mean, right? You have to be a big boy or girl. Anybody want to take, who in here besides maybe the lenders want to talk to me about what an accredited investor is?
The net worth when you have $1 million or more in assets.
$1 million or more in assets outside of your home.
Yeah.
How big of the, and there's an income requirement as well.
300,000, 250 something.
Well, it's 250 unless it's a couple, and then it's higher. What percentage of the population in North America is an accredited investor?
Probably 1, 2.
3%. What does that mean the other 97% are? They're unaccredited, right? They can't participate in the traditional investment offerings. So do you think like the Gen Zs and the millennials who typically can't even buy a property because they don't have the down payment, they don't have the income, get to play? No. What I'm going to describe, there are companies right now. Has anybody heard of Arrived Homes? Arrived Homes was started by Spencer Rascoff, who left Zillow, and a guy by the name of Jeff Bezos. You can be an unaccredited investor with as little as $150. Pick your investment home, and you buy a share of it. There's another company, RE Alpha, they do it with short-term rentals. Depending on how much you put in, you get free nights. If you live in Nashville and you want to get started, You can buy a share in the house if it's Nashville or Atlanta or wherever it is with Arrived Homes. And they'll even sign a lease with you if you qualify. So you've invested in part of the house, and you're the renter. Who thinks this is going to change real estate? $1.4 trillion in the next 5 years. You will start seeing this. Arrived Homes has done about $48 million since October of last year already. They just got started. RE Alpha has done a pretty similar amount. One of the companies that I didn't found it, but I've come in, as David said. We'll be doing this nationwide starting by the end of October or first part of November.
So how does the investor get this value for the investment?
Well, typically if it's a rental house, it's a good question. You're going to want to be an investor in rental homes. For the lenders in here, how much of a down payment does it normally take? 20, 25, 30? They may not qualify just based on the fact they don't have any reserves. Forget the down payment. And so the person who's going to fractionalize the asset sets the terms. In Arrived Homes case, they typically hold them 5 to 7 years, and they define how much cash you got to put in. They charge a management fee, so they're going to make money every year. Some of the players will keep part of the equity, like the syndicators did with apartment buildings. They're allowed to do this. So how can they do this, right? This is the part I want you to pay attention to. Because in the Web3 crypto world, we're going through, if you're paying attention to this, and you're seeing what's going on now. What do they think that they're exempt from? Regulations? Any oversight? Well, forget the taxes. It's the Wild West. So the one thing I want you to pay attention to is I don't want to end up in an orange jumpsuit. What you've been observing is going to have lots of people going into orange jumpsuits. The amount of fraud, the amount of misrepresentation, we haven't normally had to do with this, right? So you think about a real estate sale, you don't, unless you commit fraud, you don't get to go get in an orange jumpsuit, right? You're helping people mislead the lenders, do title fraud or other things. This takes real estate, right, where normally it's not a security. What I'm describing is it's a security. When you break it into pieces, it's a security. So why pay attention to this as far as agents? How many people do you know in your marketplace that maybe already have a handful of short-term rentals that say, I want to do 10 more? They go to Jen or one of the other lenders, Cedric, and you say, I can't do anything for you until you got a bunch more money. This is another option for them. You can take accredited and unaccredited investors. So here's what the issue is, right? We are not doing securities, right? It's a carve-out with the SEC. It was done a long time ago. We can bring a seller and a buyer together, just like you'd have with a stock, except for a stock, you're required to be what? Licensed with the SEC. So the way you get into the jumpsuit is you create a security and it's not registered. So pay attention. You have a company based in Miami. It's called Lofty. Anybody heard of them? They are absolutely going to get shut down by the SEC. They are not registered. They allow secondary trading of the interests. And as Anthony would tell you, if the indication of the fines with BlockFi at $250 million in February, all they're going to have is a world of hurt. So imagine you get in the middle of that. You get your own jumpsuit to go with their shutdown. And worse, if you work for a brokerage company, they're going to get fined or shut down too. So we're going to talk about what makes it a security, if I can figure out which way to go with this. All right, there's a thing called the Howey test. I'm not going to get you lost with this. Anthony's going to talk a little bit about training on this topic. He and I, with Teresa Grobecker and a couple other people, built an entire training program around this. I just want you to get the basics. There are 4 things, and you can see how often it's going to fall into this category. There's a thing called the Howey test with the SEC. If it's a buyer and a seller and it's a straight exchange of some sort of monetary thing. It's either a loan or it's a cash purchase or some mix of it. It's not a security. If we trigger any of these four things, it becomes a security. I'll start with the easy one. 2 or more people. So by default, if it's an investment property that has multiple parties in it, what is it? A security or just a real estate transaction? Security. Usually, people will register, right? You hear about the big apartment buildings that they go raise with accredited investors. They're doing what's called a regulated security offering that the SEC allows them to do. There's an exemption for them to do it, but they have to go through a process and to confirm every person is vetted, they identify them, and they're accredited investors. If you skip all those steps, you're going to run into a problem. Is this not every piece of investment property? Who wants to buy an investment property they're not going to make any money? See how easy it is to get caught up with an unregistered security? It will be everything. Lofty is selling interests in investment properties to multiple parties with an expectation of a future profit, and they're not registered with the SEC. They violate all these. Why do the Web3 and the crypto players not care? If they get shut down the week before the deadline, they pull all the talent out, burn it down, and they start over. Is that going to work for your real estate license? Yeah, just be careful. Last part of it, you've got some sort of a common enterprise. What do investors use? They use LLCs, they use other things. And we're going to get into the specifics of how this occurs. But just realize everything that's an investment property that's being split up by multiple parties that has an expectation of profit is going to be a security. The good news is there are entities and people that allow you to do this. Everybody can see that. I'll get out of the way here. Doesn't matter if it's a commercial property. And Anthony will be getting into more about smart contracts and things like that. If you're fractionalizing or tokenizing, doesn't matter if it's cash or crypto, still a security. Doesn't matter if it's a commercial property or residential property, still a security. All the smart contract does is it digitizes the terms, much like if people did an operating agreement for a partnership. So don't get lost with the fact that they're using crypto to buy it. The issue here is you still have to have underwriting due diligence. And I'll go through who the parties are here in a second, but you have to have a broker or dealer involved. Who's worked with a broker dealer before? Do you ever really hear about any of that? That's how you end up in the orange jumpsuit. I would challenge you to go to websites like the Lofty website and see if they identify who their broker dealer is. Well, I already told you the answer. They're not registered. So why hasn't the SEC shut them down? Anybody want to guess? What's that?
You want to catch it?
No, why has the SEC not shut them down?
Not fast enough?
No, it's already illegal. Do you think they got their hands full with what's going on now? Have they always been behind the curve? Well, hell, the IRS is more than a year and a half behind doing tax returns. They just haven't caught them yet. So fractionalize, multiple investors, and expectation of profit, right? Typically, you're going to find rental homes this will work for, short-term rentals, apartment buildings, 16 units, doesn't matter. It's like the Swiss Army knife of things. So think about how many more transactions as an agent you can do. This is not great news for the lending world, right? Because they don't need a mortgage. I'm going to bring in people, then I'll set the terms. It could be $500, it could be $5,000. The only requirement for the SEC is, it's like a REIT, if you're not familiar with that. So it's a real estate investment trust. 9.8% is the maximum amount they can purchase by regulations. So what do people like arrived and what are we going to do? If Will wants to invest and he's got $50,000 and he's like, I want to buy a whole bunch of different fractions, we'll split it up between multiple properties. It's like a little app like Robinhood. Literally, they have an Invest Now. I was with somebody from our brokerage, and he did something interesting. His son just graduated, so he's like 18 or 19, and all his buddies were in Puerto Rico. and he asked me to come in and explain fractionalization. Took him a little while to get this, right? He got the short-term rentals and the rental houses. Every one of the 18 and 19-year-olds were like, so you're telling me, even though I can't buy a short-term rental or my own house, I can start taking money every month and starting to build a portfolio of real estate. Again, how big a deal do you think this is going to be? Right. How many people do you have in your market now that would like to buy more short-term rentals or rental houses, that already have the expertise on how to run them? This is going to be the biggest seismic wave for non-owner occupied properties and commercial properties that we've ever seen.
Is this, I mean, I have to ask, and maybe, I don't know, but
I don't like
is
it.
this similar to what Grant Cardone is doing?
Well, Grant Cardone does accredited investor.
Okay.
So you have to have the 250 or higher and $1 million outside of your home. Here are the number of places that you can get into trouble. Anybody know what these rules are? Don't read them. They'll make you fall asleep or give you a headache.
Money and privacy?
Well, here's the big problem. If you're not familiar with the fact that, especially in places like South Florida, money laundering is a huge issue. What do money launderers love? Real estate. So if you don't identify who the person is and whether they're on the list, there are lists.
They are?
There are lists right now of people that have been flagged for money laundering. Any legitimate company will do the KYC and the money laundering check. It's not your responsibility as an agent, but you got to know that if you're taking a client who wants to buy 10 more short-term rentals, they've got to pick an entity that's actually going to do the work for them. Because everybody will get roped into it if it turns into a disaster. Look how old these regs are. It doesn't matter. The Howey test is 50 years old. It's the reason, because of the National Association of Realtors, that we don't have to have securities licenses to list and or represent buyers for property purchases. It was a carve-out. Because by definition of these three at the top, they would technically be considered a securities transaction. You'd have to get registered with the SEC. So, I don't know why this is not, oh. So this is the new player, right? The broker-dealer. It's expensive to do this. It's the other reason the Web3 crypto people don't want to do it. It takes about 3.5 to 4.5 months. And it costs you somewhere between $500,000 and $1 million just to get set up. It's easier for people just to skip the step and hope they don't get caught. So we don't have that option if we're licensed in the real estate business. The good news is you get paid your commissions. Just because it's a securities transaction, it's registered, you can still get paid your fees. That guy that I talked to in Tampa, he thinks he's got a path that he can, in the next 3 to 5 years, go from 53 to 500. How big a deal is that for his agent that brought him to that event? A huge deal. It's a huge deal. And I think I'll be talking a little bit more about blockchain and crypto training. We have an entire section in there because I'm not doing it justice. What questions do you have about this, just conceptually, about it that I can answer? Just because I've got a few more minutes before Will's coming up. Yes, Will?
When you actually get into this fractionalized real estate, is there a period where you have to hold that position? Like, do you have to hold it for a year, 5 years?
It's a good question. There's a thing called a 144 restriction when, like in the SEC regs that allow unaccredited investors to get in. It's a year. It's 365 days. So our plan is to, pardon?
I'm sorry, for unaccredited, it's a year.
Yeah, well, it's essentially if you're fractionalizing real estate and it's a Series A, it doesn't matter if they're accredited or unaccredited. They can't immediately trade. It's not like stock, right? For initial public offerings and other things with our securities, when companies go public, there's typically a lockup. The lockup on these is 365 days.
So you would get your commission at the end of that?
No, doesn't have anything to do with the commission. It has to do with if Will bought 9% of the property, the plan was to hold it for 5 to 7 years. Now his situation changed. This is how we're going to do it. We expect the market will do this. We're going to make a market to allow a marketplace to trade it. So one of the nuances in this, in addition to the unaccredited investors, is people had a lot of wealth that were smart tied up in other assets. Could be crypto, they could be sitting in Singapore, they could be wherever they are. What is the number one asset class globally that is the gold standard for properties? United States real estate. One thing that I didn't tell you in there is the broker-dealers and the SEC will only let a fraction of people come in on the primary offering. So if Will buys the primary, and a year later he wants to do it, how many foreign investors, including people with crypto, are going to want to come buy it because they only get to play after a year? We can get some in, but the broker-dealer at some point is going to say, you guys have too many people from Singapore, Hong Kong, Dubai that want to own fractions of real estate in the United States. So there's going to be an entire secondary market that comes where there's going to be essentially hundreds of thousands and millions of these that will trade over time. So if David's from Dubai and Will decides he doesn't want to hold it for the whole 5 to 7 years, he'll be able to list it in a marketplace and David could buy it directly. And there's an exchange process. We're already hearing from some of the people that are going to be on our system that Binance, FTX, and every major exchange is already lining up so that a year from the fall, they've got all their investors that are on those exchanges saying they want to move out of crypto, for good reason now, and into digital fractions of real estate, which is going to drive more demand for it. So who else has any questions? Because I want to keep us on time.
I have a question. It's kind of thinking about what you said. Like, what's the process of cashing out on it? Do they determine what the property is at that point? And let's say I want to cash out, I get my money.
Yeah, so let's talk about Arrived, what they typically do, so you guys can understand. So the question was, if I put money into it, how do I get money out? So Arrived charges like a rental property management fee. They charge an overall fee on a yearly basis. They do distributions quarterly because it's rental homes. And then the hold is designed to be 5 to 7 years. So if Will puts $1,000 or $10,000 or whatever it is into a house in Miami in the property, he's going to get quarterly distributions like he was if he was in a partnership. And then he at the yearly basis, he's going to get the distribution. It'll show the management fee that gets paid to Arrived, and then what the expectation is for the property. What are the expenses? How does it run? It's like you have a professionally managed property. And then if he decides to sell it, the digital record would change. Let's say you buy it. It'll go out of his name. He'd get cash for whatever the value is of the share, and then you would be the new owner, and they would update the table, and you would start getting the quarterly distributions. He would have gotten his money back out.
Okay, so it's in the marketplace and somebody else is buying it from
Yeah.
you. So the broker dealer is the company at that point who's doing the marketplace, because the individual person like me is not bringing anybody to the table at that
Correct. Correct. There's going to be marketplaces where people will list them, and if Will wants to sell it, any investor could come buy it for his price.
But the initial,
Has to be done through a broker-dealer to start with, and there are registered, regulated entities that have to make a market, and even on a secondary trade, because it's still a security.
Will it be based on short-term, or will there be a lot of long-term holds as well?
Yeah, most people in the Arrived model, because they are not in particular making a market in secondary transactions. There's no plan to right now. They may at some point. So you're in there to hold it for the 5 to 7 years. We believe, in the case of what we're doing at Terramint, that there's going to be a lot of value because we want the demand to come from the foreign investors that want to own U.S. real estate. I mean, for those of you in Miami, you can't get very far without people from Colombia, Argentina, or any other country. What do? They come here and they buy property. How many more of them would want to buy fractions because they can't afford $1 million condo? What do you think this does for developers with projects? They start fractionalizing 30 to 40% of the units in a project. And they can then go to their commercial development lender and go, we've already sold 40% out.
Would you say this is any similar to a timeshare?
Well, timeshare has an expectation of a certain number of days. RE Alpha does that with the short-term rentals and what they're doing, where depending on what you've done, you can get credits for nights. But it's not the same as a timeshare. Timeshares have an expectation of usage. Yes, sir.
The rate of return seems pretty high, you know, especially if you're thinking about like the old savings accounts that had some good rates and stuff like that. Like if you invest $10,000 on the Arrive, it says your total hypothetical yearly return would be about 9%.
Yeah. Who thinks 9% is better than like no percent from the bank.
1% from that bank, yeah.
Thi-
Actually, 9% is better than most investments you would make buying an entire property.
Correct? There is a lot of value in the scale of doing this. And what this does, so think about this for your clients in the marketplace. They would love to have more short-term rentals, more rental houses. They want to get out of 4 families. They want to get into 16 units, 38 units. They typically can't because it's the same problem, right? They go to Jen or one of the lenders, Eric, and they're like, you don't have enough reserves, or you're not experienced in running this kind of property for whatever the overlay and the restrictions are. They're like, great, well, I know how to run these. I've already got like 78 units in 4 families, and they just want to do it. They don't have enough equity, enough reserves. They can do this. And then the company like Terramint will just facilitate it, right? We make our transaction fees from helping them do this by establishing a big marketplace for people that want to invest in it. Like Eric's looking at, I mean, there's a whole marketplace there. He could go pick a home in Atlanta or South Carolina or Nashville or wherever. Their biggest problem, and I don't know if they've remedied it yet, Eric, last time I checked they hadn't, every property on their portal was already fully subscribed. And they had hundreds of them. Is it still all oversubscribed?
Yeah, there's only two trending, and then the rest of them are just all sold out.
$48 million since last October. This is going to revolutionize how non-owner occupied commercial properties
So do
are marketed and sold.
companies like Terramint, are they managing properties that other people can put into it, or are they owning the properties and then fractionalizing them?
It'll be both. So a company like a Terramint, like Arrived is doing it for their own account, right? They're going to charge a management fee and make money. They're going to get part of the equity. They're like a syndicator where it's like, give me money and I'll run the whole thing. Companies like ours are going to say, if you want to do it yourself and you're a brokerage, we can consult with you, or we can white label it and it'll say, ABC Realty, and they can just list all the properties in their own white labeled marketplace that'll look like it's the brokerage. For agents can bring clients to us and we'll do it and have an established set of fees and how we make money in doing it. And then we're also going to buy and do what Arrive does in RE Alpha. We're going to get our own portfolios of homes and do it as well. But for agents, it works for investors, it works for developers, it works for all aspects of the business. I can tell you, based on some conversations I had in Brickell the day before yesterday, the developers are already onto this. They are. So you've got relationships in that space. They haven't figured it out yet. You should be talking to them because you may have some opportunities to help them facilitate a lot more sales.